Now, despite the challenging operating environment, Nigerian banks have shown resilience, innovation, and adaptability, transitioning to financial holding company structures and upgrading their bank licenses. However, the sector is also grappling with management of interest rates by the CBN as a benchmark interest rate rose to a record 18.75%, so as to curtail inflation. The World Bank expects Nigeria to save up to 3.9 trillion naira this year alone from reforms, but there are also growing short-term inflationary pressures. But what is the outlook for the banking sector despite these challenges, particularly the influences of global issues, the global challenges that might affect capital inflow? This remains very important. I'm being joined by Dr. Andrew Nevin. He's an economist and a research professor. He joins me live from Dallas, United States of America. Thank you so much. It's really good to see you, Dr. Nevin.
Oh, it's my brother. It's always wonderful to be with you.
Let me start with the resilience of the banking industry. It seems like despite these challenges, they are always able to wade through. If you look at the stock market, their figures always looking pretty good. Stocks in the banking sector remains liquid. What would you say about the journey for 2023 for the banks despite these challenges?
Well, I'll say, having spent decades in the financial sector, the thing is banks are very resilient. I mean, you have very smart people running it. Everyone needs to use money. You know, you need to do something large. You need to be involved with the bank. So no matter what's happening in the economy, the banks usually find a way to make money. And I'm not surprised to see this resilience, especially in a place in Nigeria, which is so resilient on that. And of course, as you mentioned in the preamble, a number of the banks have moved over to holdco structures. They recognized the threat from the fintechs. They said, we're going to join them, not beat them as a bank. We're going to join them. They're getting involved in asset management, getting involved in more kind of app delivery of that. So, I mean, it's and payment systems. So, I mean, I think it's a strength. I mean, I've always said that the banking system is one of the jewels for Nigeria. I mean, I came originally to the country in the 2009 banking crisis, worked with the CBN, with His Royal Highness on the reforms there. And I think they've been very successful. And I think people should be proud of the banks on that and their resilience. In other sectors of the economy, if they were as well run as the banks, we'd be much further ahead.
One of the major tools being used in recent times by the CBN to rein in inflation is increasing interest rates. And some will say this would also make businesses, both big and small, run away from the banks when interest rates are high. What do you think about that, and how does it affect business development in a country like Nigeria?
And the reality is inflation's continued to creep up. I think the official number is about 27% now. So if the MPC rate is, the NPR is 18.5 and the inflation is 27%, we actually have, in a sense, very low interest rates, negative interest rates on that. And so I think that the foundational issue here is, why is inflation so high? And I think everyone understands that, in effect, in the last few years, the federal government kind of monetized its debts. It created rapid increase in the amount of naira in circulation. And then you have classic inflation, too much money chasing too few goods. And it affected us all as well, particularly in the agricultural sector, by the security issue. So there was less food being grown. So you have the same amount of money or more money in the circulation, and you have the less food. So prices go up. So rather than focusing on the interest rate is a consequence. It's not the foundational issue. The foundational issue is inflation. And until we get our inflation coming back down, we're going to continue to have these rising interest rates. But as I said, if you have a hard asset, like a real estate asset, and you can borrow money at 18.5 or 21%, and inflation is 27%, you're actually making money from inflation.
Confidence in the banking sector remains very important. What do you think banks need to do at this time to continue to earn the trust of the people? Don't forget the experience we had with regards to the naira scarcity, which some states are even reporting that now, though the CBN has said there is no cause for alarm. But what do you think banks can do more to improve that confidence? Because confidence in the banking system remains very, very important.
Well, of course, the naira scarcity issue was not caused by the commercial banks. It was caused by policies of the Central Bank of Nigeria. And, fortunately, the current central bank leadership has reversed that. In terms of the commercial banks, I think the number one thing that people want to see from them is a consistency of service quality. So, I mean, if you go use a POS and transactions decline, but you still get charged, or you go to an ATM and no money comes out and you still get charged, people are really upsetting because they use a huge amount of time to try to reverse it. In some cases successful, in some cases they lose their money, and that really damages your relationship. So I think the emphasis on service quality, I think if people get the high service, I don't hear a lot of complaints about the fees, but when people don't get the service, then the fees become a problem. So I think the number one issue for the banking system is to make sure that the quality is built into it, and then people will be confident and they'll keep their money in the bank, even though, of course, the banks are charging a lot for them to do that. But in an environment where you're really unsure, I mean, in the moment you're unsure whether your money is safe, you're going to do something else. And what do Nigerians do? You take it out in cash and don't use the banking system, which has damages the economy because it takes the ability to lend out of the economy. Or you go into cryptocurrency, which is risky for the individual and again, not really helpful for Nigeria. So the banks can get the service quality up. I think that's the number one issue, and make sure that there's that consistency. What I don't think the banks need to do is start to lend into other sectors. So over the decade, the decade I was there was too much talk about the banks being venture capitalists, long-term capital. That's not their role. We need other institutions that are going to invest in small businesses and venture capital type things. We need other businesses that are going to invest in infrastructure, like some of the development banks we have in the country. But the commercial banks need to focus on their core mandate, which is short-term lending and transactional banking, and make sure the quality is built into that and that people feel confident if their money is in the bank, it'll stay in the bank. If they go out and spend using a POS, that it's accurate and they only get charged what they should get charged.
Technology remains very important in this space. I'm talking about the banking space now. We've seen the fintech guys providing solutions at this time to help the banking sector. At some time, some thought that was going to affect jobs in the banking sector, but I think they are working side by side now. But what impact would you say, or what addition, what positives would you say you've seen with regards to the fintech guys that have come to play supporting the banking and financial space in its entirety?
Well, I think that the fintechs have made everyone raise their game. I mean, you going along as a commercial bank and you think you're a big bank and very profitable, and someone comes along like Paystack and has takes a significant part of the market very quickly because they offer a better service, what you need at the time, a higher quality technology. So I mean, it's really forced the banks to up their technology games. And I was with a financial institution in the country yesterday, a very well-known one, who really have invested a lot in technology and have made big progress in it, and better customer service, much better product as a result of it. But I don't think they would have done that if they hadn't had the pressure of the fintechs. So the fintechs are raising everyone's game. I mean, if you want to loan money as a bank to retail borrower, you've got to match the fintechs in terms of ease of the product and the automatic nature of the product on that. So I think fintechs are fantastic for the country. And of course, company like Flutterwave, I mean, it's an American company now, but it was born in Nigeria. It's having an impact across Africa. So it's fantastic. So keep the fintech innovation coming. And of course, as I said, many of the banks, the ones that have adopted a whole holdco structure, have done it so that they can become more like the fintechs. They've established their own venture capital arms or their own fintech kind of arms. So they're also trying to compete in developing new products.
Well, getting more interesting now, still staying with the banking sector. Now there are stocks in focus. You see the banks doing pretty well, and you see billions of naira coming out of their books almost every quarter. And at the end of the year, they pay dividends to shareholders and everyone smiles home. But with the present challenge, of course, economic challenge, a global economic challenge that we face, what do you think about banks' profit moving forward?
Well, I mean, the profits are growing and the stock price is growing. But remember, we just said we had 27% inflation. So if you wanted to make 8% return on your money, you need to have at least 35% between capital gains and the dividends. And the last time I looked at the numbers, we weren't quite at that level. So they're profitable. But the reality is, until the economy improves, they're not going to really be creating much value. I mean, I think the minute that we get an economy growing at 5-7%, the banks are going to really take off in terms of their scale and profitability. But right now, because once we adjust what the outcome is or the returns are from the banks by inflation, it's okay. It's not terrible, but it's not the high levels that may look on the surface.
Now, in some quarters, some would argue saying the banks also have the role to play when it has to do with this FX scarcity that we have, allocating FX to those that really need it. In some quarters, there's been allegations that maybe some banks will give to friends and favor some, well, not proven, but all the same, we just need to ask that what more can be done by the banks to help the central bank make sure that FX available gets to those that need it before we start to address. We know we have liquidity challenges, but can they play a role in helping address this one way or the other, at least to avoid round tripping and all of that?
Well, totally. I mean, even the language they use is those who need it. I mean, it's not possible to have a system of allocation in Nigeria. I mean, you can go back historically. You could say take China back when it was industrializing, and you could say, okay, we're going to allocate resources to the companies that need it. And the Chinese model's been successful. But Nigeria is a highly open economy. There's millions of people in the diaspora. There's huge flows back and forth already. We're dependent on a lot of things that we need to import. There's no system that's going to work that allocates it to the best user. The only system that's going to work is unification of the rates. We thought we were there when the President Tinubu took office. You know, we've seen this widening with the parallel rate. I mean, I've consistently said, as long as the CBN is involved in the decision of individual businesses and individuals, retail users of FX in the allocation, it's never going to work. So I think that we have a few more steps to take here. But the fundamental reason we're short of dollars is because we allowed the production of oil and gas to collapse, right? So it got as low as 1.0. My last number that I saw for October was about 1.5 million barrels, a little over at that. So some improvement. It's got to get to 1.7, 1.8 very quickly to kind of stabilize the market. And of course, I think the CBN is taking the right steps. They have historical obligations, historical liabilities that need to be cleared away that will give more confidence. But until we get one rate, you're always going to have this round tripping. It's guaranteed to be a source of corruption. So I'm not going to encourage this idea of searching for who needs FX the most on that. The other thing that's really contributing to the FX pressure, of course, is the JAPA syndrome. Because I mean, you know, I don't know if I won't ask you on air if you're thinking about japping. You're doing really well in Nigeria, or leading journalist. I'd like to see you stay, but you know, when you JAPA, I mean, ultimately you're going to earn FX, but in the short term, in the year or two that you're organizing it, you're using a lot of FX. You have to pay, for example, the British have very high fees and multiple fees, and then the NHS. So that transition process, while we have so many people japping, they're also have a big demand for dollars. So one thing that could really help the exchange rate is if people felt there were more opportunities in the country, they didn't feel the need to JAPA, would immediately take pressure off the exchange rate. So again, you know, we need to fix these fundamental problems rather than some administrative solution that just, in our experience, just leads to corruption.
Yeah, let's stay now a bit with President Tinubu's drive for investment, because I thought I was going to ask you this question. You're in the United States. The president attended United Nations General Assembly, and all the talks was about attracting investment. Very recently in Saudi Arabia, the same, and just a few days ago in Germany, we've seen that move to attract investment into the country. You've been in this space for years. What is your move? What is your reaction first to President Tinubu making himself the chief marketing officer of this country? And how do you see this playing out at the end of the day, getting this FDIs and FPIs in? What are your expectations?
Yeah, no, I think His Excellency is doing the right thing. I think we've made big progress in terms of presence on the world stage and investment opportunities. I think the issue is, can it translate from the president down into the practical realities of it? And I think a couple of things that may be challenges is what the president has not done, or his administration, is take on the multiplicity of agencies. So when the president of Germany says we're going to invest in Nigeria, the German companies get organized, they come and do their visits. They come with goodwill. They understand President Tinubu wants to open the country. They understand the scale of opportunity. They work with Nigerians already in Germany, so they're predisposed to invest. But then they come and they find out for every sector, there's multiple overlapping agencies, and they have this challenge in trying to navigate all that. And that takes energy out of the investor. Ultimately, many of the investors may decide, look, we have the goodwill to want to do it, but it's just practically, it's not easy. So I think there's a few more steps, that we need to do on the ease of doing business in terms of simplifying doing business, and it really requires some structural changes. And that one of the things the presidency has not done is just simply eliminate some agencies or merge some agencies. So we talked about the Orange report. It was done in 2013. It was assented to, I think, by President Buhari, His Excellency, in 2020. President Tinubu said that he would implement the Orange report, but I haven't seen any people can correct me. I have not seen the implementation. Every time I read the Nigerian media, you continue to see, I still new agencies I had never heard of pop up in the media who are designing regulations in the industry. And as I said, the industry, in particular the foreign investors, then say the complexity of dealing with these multiple agencies makes it too hard. So I think the goodwill is there. I think President Tinubu has done the right thing, but I still think there's steps to go to really make it an attractive investment environment.
Well, moving on, it's few weeks to the end of the year, Dr. Nevin, and a lot of projections and reprojections. Even the World Bank have come up to review some of the figures moving on to 2024, of course, considering global issues that are beyond our control. What is your entire outlook for, of course, the global space and maybe Nigeria?
Well, in the global space, we just need to recognize the demographic realities. Outside of Africa, the world is aging. People are less, they retire, they're less productive when they get older, past about 55 on that. So unless there's some dramatic increase in productivity or people are being able to work longer, keeping their brains healthier longer, we're going to continue to see low growth around the rest of the world. And of course, we're rapidly moving in the next few decades to where 40% of the young people actually come from Africa. So that's just the truth. And if you look at China, people lament the decline in growth rate of China, but they have a very rapidly aging population and they have a shrinking number of young people. So unless you get this massive productivity boost every year, which we've never really seen in history, you can continue to have what we think of as low growth. But for us, that doesn't really apply. We don't have an upper limit on our growth. We have a young population. If we invest in them, as we said before, there's an infinite number of jobs around the world that you can do remotely now: coding, business process outsourcing, accounting, legal. There's more and more Nigerians who are working in these global value chains staying in Nigeria. So we can grow faster. The number one thing in the short term, as I said, is get our hydrocarbon production up. If we can be exporting hydrocarbons, exporting oil and gas, and exporting grains, we'll be just fine. But I'd like to say, if I had to make a projection, everyone knows I don't like making projections, especially about the future, but I really expect in 2024, we've got to be above 4%. I'd like to see above 5%. But I also think we have a challenge in measuring it. It's just very difficult. The NBS does a heroic job, but we don't have the resources or tools in a modern economy to really know what's going on. So someone does this remote job. Many Nigerians are finding either task rabbit type work remotely, or they're actually working for foreign corporations remotely while staying in Nigeria. Is that captured in the NBS statistics? I don't think it is. So there may be more economic activity going on than we actually think.
In 2 minutes, Mr. Cardoso is expected to unveil his monetary policy, of course, roadmap, or how do you want to call it, his program for running the central bank for the first 5 years, of course. But I just want, what are your expectations, maybe one or two things that you expect in that policy statement that will be released at the bankers' meeting tomorrow?
Well, I understand. And of course, we've had the MPC meetings delayed. I think the number one thing that's going to come out of the central bank is a return to its core mandate. So I was there in 2012 when His Royal Highness, when he was governor of the central banks, Governor Sanusi, said that they were going to expand their programs, development banking programs. So anchor borrower, ended up in the creative industries, agriculture, SMEs. I think that under Governor Cardoso, they're going to come back to their core mandate, which is, how do we manage the monetary affairs and the FX affairs of the nation. And we have other institutions like the Development Bank of Nigeria, like the Sovereign Wealth Fund, that have come along and have really grown and can take these other roles. So I think what you're going to see is we're going to try to do less at the central bank. I think you're going to see a roadmap that takes the central bank out of dealing with individuals and individual companies so that they're dealing with the banks. I mean, that's the traditional role around the world. The central bank is the banker for the banks. So they do exchanges of foreign exchange, monetary policy between the central bank and the banks. And then the banks and other actors become responsible for the FX needs for individual companies and individual Nigerians. So I think those will be the major thrusts of the change. So a simpler, more focused central bank. What I'm not sure about is what we're going to do with supervision. So I'm not sure if people are aware, but under the current structure, 2/3 of the banks have their supervision done by the central bank, 1/3 by the NIBC for historical reasons. We may see a change in that structure. If you look at many central banks around the world, they've separated out, or financial systems separated out, the central banking function from the supervisory function of the banks and other financial actors. So the term for this is the Twin Peaks model. So we may see the CBN come along and say, actually, we'd like to move to a Twin Peaks model. So maybe the NIDC expands and supervises all the banks, and the central bank focuses just on the monetary and FX policy. But however we do it, the central bank, I think, is going to try to do less and be less involved in matters that, unorthodox matters that are best left to other players in the financial system.
I must thank you so much, Dr. Andrew Nevin, for your time on the show. Economist and research professor joining us from Dallas, United States. Do enjoy the rest of your day. We appreciate your time. Thank you so much.